Alright, so Bitcoin, the last 6 hours is here. By the time I upload this video, this is going to mark the 6-hour countdown until the next Federal Reserve meeting. Now, in today's video, I want to go through 3 of my macro BTC charts, and I'm going to be going in order from the most conservative price target to the most bearish price target. I'm going to be offering you 3 different perspectives, talking about what I think is most likely to pan out, and also if you want to know more about what to expect coming into this FOMC meeting and why I personally believe we're about to witness a 75 basis point increase, what that will mean for the market, what does this even mean in itself, then be sure to head over to my channel and watch yesterday's video, what to expect from tomorrow's FOMC meeting. With that being said, let's jump right into today's video. And once again, I'm going to be starting off with the most conservative target, and we'll be moving down to the most bearish target as we go. So, starting off with the CME gaps over on the Chicago Mercantile Exchange futures. Now, these futures tradings, they are obviously not open over on the weekend, so when Bitcoin moves up or moves down over the weekend, you often have these price gaps. Now, the theory with the price gap theory is that often we move back into these price gaps and fill them before we start moving back to the upside, and that has been proved time over time again. I don't want to lengthen out this video and go through like 10-20 different examples. If you want to, just be sure to type in BTC1 or BTC CME futures over on TradingView, and you can go check out the price gaps like over here, over here, over here, over here, etc. With that being said, the next CME gap to the downside is at 18,500. Now, we've already massively cascaded below the previous CME gap around about the 22nd of December, and we're now currently heading down to the CME gap approximately within the ranges of the 11th to the 14th of December. This target would yield a $18,500 BTC USD price, and notice how my first target isn't the previous all-time high. Now, in my opinion, I do not, unfortunately, think we're going to be holding the previous all-time high. I think we are going to be breaking market structure. If you kind of keep up with what's going on in the economy, you'll know why. The economy is in absolute shambles compared to how it was in previous cycles. I was here in 2018, and the stir of geopolitical news, war, real interest rates going up, real wages going down, the cost of living going up. It is an absolute shitstorm in the economy right now, and because of this reason, I think the most conservative target we should be looking for is another 9.6% drop over on the Bitcoin price. So with that being said, let's move over into our next price prediction. Now, I'm going to be moving over to one of my favorite macro charts, and if you're a veteran to my channel, if you've been watching for the past couple of months, you'll recognize this because we were covering this quite a while ago. If I bring back my original price target, you can see we were calling for this move down to the 200 week since we were all the way up here at 43,000. We were calling for a 46% drop, and at that time, yes, we did say this could be a potential bottom for Bitcoin, but when we said that, obviously the consumer price index had not come out. The stir of the economy has gotten a lot worse since then, and now I believe that we should expect a 75 basis point increase instead of a 50 basis point increase. Just quickly, the last 50 basis point increase on the last FOMC meeting pulled us down more than 48%. So you can imagine if we have a 75 basis point increase, this could get very, very ugly. Am I saying we're going to go down another 48%? Absolutely not. That is absolutely not what I'm saying. Even my most conservative target is nowhere near there. However, the next target to keep your eyes on is the next macro moving average. Now, we talked about the 200 week up here. This is this orange line in the sand, the purple line in here, and actually I should have it with a slight upwards inflection because this is going to be taking in data points from the past 300 weeks. And you can imagine, just very quickly, if we drag this back, 300 bars worth of data, then we're taking in data points from a very, very long period in time ago. So that being said, if we remove these, and we've got these extrapolated over, but what you'll notice is if we talk about the 200 and the 300 week collectively, the 200 week was the exact bottom of the 215 bottom. Now, obviously, this is the 300 week moving average, and at this moment in time, the second the 300 week starts to load in, that represents that the BTC USD price, specifically on this chart over on Bitstamp, has been trading for 300 weeks. So we obviously do not have data of how the 300 week would have reacted, but in my opinion, it would have looked something like this. And as you can imagine, the 300 week would have been the bottom, but you may not want to extrapolate it back. That's fine. Let's talk about what happened in the previous 2018 cycle. Bear market low was exactly on the 200 week moving average. We obviously started to move up, so both of these moving averages moved to the upside. And when we capitulated in the pandemic scare, which in my opinion, this drop and the pandemic scare probably represents the most kind of likelihood of what we should expect in these markets. For example, if you look at this massive capitulation, you can see on the weekly time frame, it was a huge candle body to the downside, a huge wick down to the moving average, and then a big push up, and that was the bottom. Now, in my opinion, we could really see something like this week, where we just completely cascade and we head all the way down to the 300 week moving average. Now, if something like this does happen, I would be heavily DCAing Bitcoin. Now, I want you to distinguish between DCAing Bitcoin and DCAing altcoins. I've been I've been advising you not to DCA altcoins for the past couple of months. And, you know, if you've recently found my channel and you have been DCAing, then, you know, obviously DCAing just does not work in a bear market. I say this from experience. I DCA'd altcoins back in 2018, round about this cycle, and I got absolutely wrecked. And coming into the Bitcoin bottom in December 2018, that was not even the bottom for altcoins. You know, they had a dead cat bounce, and when Bitcoin came down and made a higher low, altcoins got slaughtered. So be super cautious. I really do advise against DCAing altcoins. I've been saying this for quite a long period of time now, so just be very cautious. In my opinion, the second most conservative target we have is down here to the 300 week. Now, I do believe if we do head down to this target, let's round it up approximately to 16,500, I do believe that we would be out of there relatively quickly. However, you do want to be very cautious, because like I said, the state of the economy at this moment in time is a lot more brutal than we've previously seen in other cycles. However, you know, the fear, uncertainty, and doubt in this market in this moment in time, and even the market structure, looks very similar to what we saw in the pandemic scare. So with that being said, the second most conservative target is coming in at 16,500. Now, let's wrap up with some classic Elliott wave theory. Now, you can see, you know, I'm not going to draw the individual waves from the previous cycles, but you can see our first cycle, 1, 3 wave, 5 wave, ABC correction, 1 impulse, 3 impulse, 5 impulse, ABC. And if we look at the market structure now, 1 impulse, 3 impulse, and we've already had the 5 impulse. So, you know, it's very obvious that we have already topped out in the market structure. If we come over to our ABC correction, you can see our A bearish impulse, B correctory wave, and C bearish impulse. So with this being said, according to the Elliott wave theory, we would be in the last leg in the sand. And with these impulses within your A and your C bearish impulse on the corrections, these constitute 5 waves to the downside. So depending on the direction of the trend, you have a 5 wave. So for example, if you're heading up in a bullish impulse, you'll have a 1 wave, 3 wave, 5 wave, and then an ABC correction if you're switching into a correction that isn't the 5 wave. Now, we are on the 5 wave now, so we've already had our 1 impulse, 3 impulse, 5 impulse, A, B, C, and coming into our C wave, we've already had the 1 impulse, 2 correctory wave, 3 bearish impulse, 4 correctory wave, and then 5, we are currently sitting within this last capitulation, at least according to Elliott wave theory. Now, there's tons of bearish volume coming in, and like I said, you know, I would not be surprised if this does allow us to carry enough momentum to push back down below the previous all-time high, which is at this range around 20,000 to 19,500. With that being said, according to Elliott wave theory, when you do have your A, B, C macro correction, the C wave should always be above the 1 wave, and it should always be below the 3 wave. So we're obviously not going to bottom up at the 3 wave. You know, we are all the way down here now. So with that being said, the most bearish price target that I would consider coming into fruition is all the way down here on the one wave of this bullish market structure. So once again, you can see from the lows down here, 2018, you've got your one wave, two correction wave, three impulse wave, four correctory wave, five bullish impulse wave, and we're currently sitting in that A, B, C, and if this C wave does be as bearish as physically possible, then the price target would be down here at 14,000. So with all of that said, we now have three price targets over on the over on the Bitcoin price. So the most conservative, once again, coming in at 18,500. The second most conservative coming in at 16,500. And the most bearish coming in at 14,000. Now, where is the exact bottom? Well, the whole point of this exercise was to say we obviously do not know where the exact bottom is. No one has a crystal ball. No one can tell you where the exact bottom is. You know, if you're watching a YouTuber that says, I know where the exact bottom is, they're just lying to you, because no one knows where the bottom is. All we're doing is looking at previous trends. We're extrapolating based on, you know, Elliott wave theory, the Chicago Mercantile Exchange gap theory, and also the most commonly held moving averages, which are the 200 and the 300 being down here at around about 16.5 thousand. So in my opinion, what is the best way to navigate these Bitcoin markets at this moment in time? Well, I've been saying that I am going to be buying the dip down on Bitcoin at these lower price targets. Now, this makes me feel young again, because I've been in Bitcoin for a while, and coming back down to these 20,000 price targets, I mean, it just reminds me of all the way back here in November 2020. And I was very, very happy to buy Bitcoin down here, just like I was happy to buy Bitcoin at 7,000, just like I was happy to buy Bitcoin at 3,000, and just like I was buying Bitcoin at $700. So I'm very, very happy to pick up cheap Satoshis around about these levels. With that being said, I would have my buy orders going down in increments of size. So, for example, I do now have buy orders set with a large amount of my capital on the CME gap at 18,500. Now, in my opinion, I actually personally don't think this is going to hold, and I find it much more likely that we're going to head all the way down to the 300-week moving average. So 16,500 is where I personally predict the bottom is. Bear in mind, I'm not a wizard. I do not have a crystal ball. This is based on my TA. This is based on looking at previous trends, and I find it most likely that 16,500 will be the bottom. But I do not want to miss out on the opportunity of coming down to the one impulse on the Elliott wave theory and missing out on Bitcoin at 14,000. So I am going to be setting buy orders between these ranges. Be very, very cautious. I do not think that at this moment in time, this would be the time to be leveraging to the downside. I really do think, once again, by the time I post this video, this is going to mark the 6-hour countdown of the FOMC meeting. I'm going to put a premiere on this, so this goes live at 1 p.m. where I live. So within 6 hours after I post this, the FOMC is going to be wrapped up. I am going to be updating you on what is going on later. I am unfortunately going to be busy towards the latter half of this evening, so I will not be able to update all the altcoins and update everything that's going on in the market structure. But like I said, I made a video yesterday what to expect from the FOMC meeting, and in my opinion, at this moment in time, if we do have a 75 basis point increase, then we are very, very likely to massively head to the downside. If you do want to keep up on the minute like that of what the FOMC results are, then be sure to head over to my Twitter. It is at 618_cowboy. You can also look in the comment or in the description of this video. You will find my socials, or alternatively, if you do head over to my Twitter and click on about, you will find that we have the Twitter, Instagram, and Discord link. Now, also, if you're not part of the Discord already, I do definitely recommend you join the Discord. We've been running a couple of trades over there. The past 2 trades we have made on the Discord are up 164%. So, like I said, if you want to join the Discord, be sure to head over to here. All of my official links are over in the description. I do not have WhatsApp. I do not have Telegram. If anyone comments anything about WhatsApp or Telegram, it is a scam. I've been having a lot of scammers trying to impersonate my channel recently, so be aware. I will never message you. I will never ask you to do investments with me. I will never say, hey, here's my WhatsApp. I mean, think about it logically. You know, I've got 6,000 followers. Why on earth would I want to give 6,000 people my mobile phone number? So be very, very cautious. These scammers are scumbags, and they will stop at nothing to steal your crypto. That's all I've got for you today. Hope you enjoyed today's video. If you want to take a screenshot of these price targets, be sure to do so. All I've got for you today, as always. See you later on. Cowboy out. Peace.